Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Hello everyone, welcome back to the channel. In this video, we'll talk about why timber from deforestation zones is not a smart investment in today's market. Let's get started. A piece of wood can look clean and simple, but its backstory can be anything but. Timber from deforestation zones usually means wood linked to forest clearing, illegal logging, land grabs, or places where rules exist on paper but aren't enforced well. In 2026, that backstory matters more than ever if you're thinking about timber stocks, ETFs, timberland funds, private deals, or even long-term supply contracts. The big issue is risk. Legal pressure is rising, major buyers are tightening sourcing rules, and reputational damage can smash returns fast, even when the price of wood is strong. This article is for education only, not financial advice. The goal is to help you spot high-risk exposure and avoid investments that depend on questionable wood. What counts as deforestation-linked timber and why it is harder to spot than it sounds. Deforestation-linked timber is wood that comes from, or is connected to, the clearing of natural forests. Sometimes that clearing is illegal. Other times it's approved, but the approvals come from weak oversight, corrupt permitting, or land conflicts. The tricky part is that the risk often sits in the supply chain, not the final product. A finished board, plywood sheet, or paper product can be far removed from the harvest site. By the time it reaches a port or a warehouse, it may have been mixed, resold, processed, and relabeled. There are a few common ways timber can be legal on paper but still tied to forest laws. A mill may buy logs from several sources, mix them together, then sell the output as one blended product. The paperwork looks fine, but the mix can include wood from cleared natural forest. A supplier may show permits for harvest blocks, but the harvest volume shipped is far higher than the land area could produce, meaning the extra wood has to come from somewhere. Timber may also be harvested from disputed land, including land grabs, then moved through intermediaries until the origin is hard to trace, and the final exporter may claim they didn't know. For investors, that means you can't judge risk by a company's website photos or broad statements about sustainability. You have to think like a detective. Where did the fiber come from? How was it tracked? And who checked it? Red flags in the supply chain that investors can understand. You don't need to be a forester to spot warning signs. Most red flags are basic business signals that something isn't being tracked tightly. That's the end of part 1. In the next video, we'll look deeper at risks, red flags, and safer alternatives for investors. Stay tuned for part 2. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.